You know, when we look at an income statement, underneath R&D, we typically see something by the name of SG&A, or Selling, General, and Administrative. Now, it's important to remember that SG&A does not, and I said does not, include production expenses or production costs. Rather, the SG&A is all of the direct and indirect selling expenses, okay? Direct and indirect selling expenses. It also includes all general administrative expenses. Now, every once in a while, in the SG&A section, you might see a one-time cost. But that's super rare because you don't put one-time costs into the SG&A. Now, some may do it, but it doesn't go there. So one-time costs should not be in the SG&A, okay? They're a different part of the income statement. So now that we understand a little bit about the SG&A, let's look into a little brief example. So we're on the income statement right now, a company by the name of Bank of America. Now, it's important to remember that, again, there's always annual statements and quarterly statements. We're looking at the quarterly statement. And it's also important to remember that these numbers are in thousands. Now, when it comes to a bank, banks bring in revenue. You see Bank of America brought in $22 billion in revenue in their last quarter, but their cost of revenue is basically nothing. Because how much does it cost to charge people fees, and how much does it cost to use people's money and invest it? It doesn't really cost anything on the bank's part. But where banks do spend their money is in the SG&A. Selling, General, and Administrative. Because banks have to get customers in, they have to advertise, they have to have commercials, they have to put a lot of money into marketing just to get people into the door. They also have to put a lot of money into employees just to get people to continue using their bank. So although banks don't have cost of revenue, they do have Selling and General Administrative, which is a relatively high amount. You see, this Selling and General Administrative number is half as much as their total revenue. Now, let's look at a different company. Let's look at the company GM, General Motors. So right now we're looking at General Motors income statement, and we see when it comes to General Motors, it's very different from a bank like Bank of America. Because General Motors makes a product. So General Motors, in their last quarter, they brought in $38 billion. But the cost of that revenue was $35 billion. As a result, General Motors isn't able to spend as high of a percentage on Selling, General, and Administrative. See, they only spent $2 billion on Selling, General, Administrative, which is about 5% of their total revenue. Whereas Bank of America, which we looked at last time, they didn't have cost of revenue, so they're able to spend this gross profit that they had. They were just able to spend more of this gross profit on Selling, General, and Administrative. Typically, companies that have to create a product are not able to spend as much on Selling, General, and Administrative because they have to spend their money on creating a product. But companies like banks spend their money on getting customers in the door and keeping customers happy. So very different business models. And when we look at a company, it's important to not just look at the cost of revenue, but also look at the Selling and General Administrative numbers to see how much money they're spending on things like advertisement, marketing, administrative costs, etc. So different companies have different numbers, and it's also nice to compare companies that are in the same industry when we're wanting to figure out which company's better.